Hey guys, I just want to put a quick video together about silver mining costs. I want to give you my take on it, how I'm going to start looking at it differently, and we'll go over that. Before we do though, I went to my coin shop last Friday, and I went in and he has this huge bag of dimes in there that I've been eyeballing, and I wanted to start chopping away at it. And I asked him to see it, and he said, "That's gone." I was like, "Are you kidding? Well, what's left?" He said, "Not much." He pulled out his coffee can, and this is what he had. I mean, and I don't like using the term junk silver, but this stuff was junk. Standing Liberty quarter, can't read the date on it. Yeah, slicked up barber quarters, clean barber dimes. There's a seated Liberty quarter, no readable date. Yeah, this was it. So he now has nothing. I guess the good stuff I did buy was there was a couple proof Kennedy halves that I got, but $12.75 in face. I paid a premium for it. I didn't like doing that. That was the first time I've ever paid. I actually paid a premium for lesser product. I wasn't too happy with myself when I walked out of there. I should have just placed an online order. So Mark Twain famously said, "A mine is a hole in the ground owned by a liar." Okay. Now let's think about that comment. It's always been a pet peeve of mine that we as stackers that find tremendous value in silver are beat over the head by two different people with this $5 an ounce to mine silver nonsense. Yep, I said nonsense. Now, let me have a full disclaimer here, guys. This is the way I'm going to start looking at this number. People are going to come on this video and tell me that I'm a fool. They're going to tell me that I'm too simplistic, that I'm looking at it the wrong way, and that's fine. I'm fully prepared. This is the way I'm going to look at mining costs, and it's not going to be $5 an ounce. $5 an ounce is a non-GAAP number, okay? Generally accepted accounting principles. Where have I heard that term before? For all you young guys, we're going to rewind about 15 years to when the internet bubble was forming in the stock market. And they were valuing all of these companies with non-traditional metrics. Pets.com. Yeah, you can't look at the bottom line with Pets.com. It's the future, guys. Everybody's going to be buying rubber dog bones on the internet. And so these companies got just tremendous valuations, and they were using phony numbers, non-GAAP numbers. Well, all the silver bashers will say, well, look, it's in the industry report. That's what they use, the cash costs. That's what it costs to mine an ounce of silver. All right, well, let me ask you this. Why do you think the miners would use cash costs to show what it costs to produce an ounce of silver? What do you think the method to their madness would be there? Remember how I've talked to you in other videos about always ask why, always question? Why would a public company show an artificially low number? Why would they strip out all the costs of doing business to show this one number? Could it be to attract investment? What sounds more desirable to you guys? Yeah, we pull this stuff out of the ground for $5 and sell it for $30. Or razor thin margin, guys, be careful, we don't make a lot of money. They come up with an industry standard to show cash costs for mining in order to attract investment. Period. Period. You know, if you're starting up a business and you created one product, okay, because the miners do one thing, right? They mine, hence the name, mine, miners. They mine product. At the end of the day, they have metal to show for their efforts, and they have a profit. That's what we need to look at. Okay, how much the miners make per ounce of silver? That's the way that we're gonna come up with the cost. But if you had a business and you created I don't know, a widget of some sort, and in doing so, in creating this widget, it created an environmental impact. Well, if every quarter you had to clean up the environment, don't you think that would impact the cost of producing this widget? Would it be fair to split out all these numbers? You know, being a miner is a lot more than just pulling it out of the ground. They have to explore. They have to find the silver. Okay, the silver doesn't come to them. They go to it. That needs to be in the cost. Permitting. Government, dealing with government bureaucracy. Part of the cost. Refining. Restoring the environment. Epic RV sent me a great video. It was Modern Marvels by the History Channel, and it was on silver mining. And they showed how a mine was basically, they mined it out, and then they showed the company putting the land back together. Cost of doing business. Infrastructure. Cost of doing business. This fictitious number, this perfect world number where we strip out all the costs of being a mine and just focus on one little thing is just complete nonsense. Sky on Seeking Alpha had a great article. Now, understand, guys, I'm talking about primary silver mines. That's the best way to look at it. The silver that's mined as a byproduct of other metals, well, that's pretty tough because they can account for that any way they want. They can subsidize the cost of silver with other metals. So really the best pure way to look at it is with a pure silver miner. So he took a look at Pan American Silver, and they actually mined in the third quarter. We're not going to look at the fourth quarter. They actually had a big loss for the quarter. They had to take a $100 million write down because of the Navidad project in Argentina, which isn't going well for them apparently. And so in doing so, it was pretty a convoluted number. It would have actually looked a lot worse. So I went with his article, Q3. They mined 6.2 million ounces. Okay, and then what he did is he took the gold, zinc, lead, and copper and created silver equivalent ounces. Okay, so it was all the metals combined to make it look like it was just in silver terms. And basically he came up he looked at all their expenses, and he came up with a cost of $25 an ounce to mine it. I'm going to go one step further. They made $38 million for the quarter, and they mined 8.6 million ounces of silver. They made a profit of $4.41 on each ounce of silver, period. I'm going to start looking at these miners' earnings reports, and I'm going to look at their profit, guys. And I'm going to actually include, because the bottom line will include everything that it costs to being a business, right down to the free coffee for people that visit the mine. It's all a cost of doing business, okay? And that will show in the final earnings report, and this will show me how much they make for each ounce of silver mined. And in this case, they made $4.41 per ounce of silver mined, period. This is how I'm going to look at it from now on. I'm not going to let them basically fool me and deceive me into thinking that it's a much lesser number. The earnings reports, it will tell the story. That's what I'm going to look at. Anybody that wants to tell you that it costs $5 an ounce to mine silver also believe that in the future, 15 years ago, everybody would be buying their fake dog bones on the internet. All right, guys. Talk to you later.